Welcome back to Talk the Walk with me, Sarah Wong. I'm with Clifford Bennett, Chief Economist at ACY Securities. He joined us from Sydney, Australia. Thank you so much, Clifford, for being here.
Pleasure.
Now we're talking about, the efforts by central banks across the world to tame inflation, especially in the U.S. and in Europe. And amid all the volatilities we've seen in the past few weeks, China's central bank decided to keep the medium-term policy rate unchanged for the fifth straight month. And we just heard that the Bank of Japan will maintain its monetary easing program and ultra-low interest rates, despite the yen has been dropping to a very low level. I wonder, is Asia a relatively safe place for investment right now, or there's more to that?
I think Asia could be the place of refuge through this coming crisis of potential recessions, Europe, the United States, higher energy, food prices around the world, all of that turmoil. It's going to impact Asia, but perhaps less than elsewhere. And we saw that in the GFC, how, really China-Asia region recovered far more quickly in a matter of weeks almost to the GFC situation, where a lot of American economists expected the same sort of pain to occur in Asia. It really didn't eventuate as much, not to the same degree. And I think we could see that again. It is not surprising to me that the Bank of Japan left policy unchanged. The Bank of Japan, maybe, not many people have been around quite as long as I have. I've been trading since I was 2. Well, that's how I justify my career length. But I really do think the Bank of Japan has a history of being very happy to have the yen decline. They see this as a major boost to their economy, and they don't see it as a problem. So the Japanese themselves, especially behind closed doors, do not see a falling yen as a problem. They see that as an opportunity and a further sort of strengthening factor to their economy overall. Now, the Japanese economy, as we know, has been in the doldrums for a very long time. There are signs it is emerging, but it sort of takes 2 steps forward, 1 step back. It's not a sustained, solid economic trajectory as yet. And also a similar story with inflation. So until those 2 factors, the economy and inflation in Japan, really take hold in a sustained way, in a significant way, the Bank of Japan will be very happy to allow the yen to continue to fall to support its exporters and the economy in general. The Bank of Japan wants inflation at this point, so it's hardly going to be in a rush to be raising rates to head off inflation. And I know a lot of the market talk of late has been about, well, the Bank of Japan will raise rates to support the yen. It doesn't want to support the yen. I think people need to be very mindful of that. So policy will stay on hold in Japan for some time. I think with China, now that we know that lockdowns have a potential to be reoccurring, they may not be, but they have the potential to be reoccurring. And I think really the PBOC will want to sort of watch and see a little bit to see, as the lockdowns do get removed, that the economy itself develops an upward trajectory that's satisfactory. But if that weren't to become the case, if after 2-3 months the economy had still not recovered from these lockdowns, then I think you would see more steadfast action from the PBOC. But for the moment, it's a little bit watch and see.
Interesting. Now, I want to look at your home country, Australia, Clifford. You've previously slammed your country's central bank, the Reserve Bank of Australia, for panicking and playing catch-up, and probably still being, too late to do all of that. And here's something you said that I found particularly interesting. I quote, "What is happening is a maturity of the China economy that this allows rampant real estate and infrastructure growth. Investment and business activity in China will remain impressive, but less of the nature that really spurred Australia's commodities in the past." This is or should be all part or parcel of the Reserve Bank of Australia's thinking in addressing the current situation. And I wonder, are you suggesting that Canberra should stop taking cue from the West when it comes to fiscal and monetary policy?
Definitely. Australia is in an interesting historic position here. I always open most of my speaking addresses with, I am Australian, therefore I am Asian. And Australia has to recognise our place and role is in Asia as a member of the Asian family, and our competitors are in Asia as well. And we should be adopting policies that are appropriate for our economic environment. I think the Reserve Bank has in the past tended to follow the actions, almost the statements of the Federal Reserve, and that just won't do. Australia really has a foot in what I like to call the new first world of China, Asia, and the old first world of Europe and the United States. It is its commodity exporting that has saved the Australian economy on several occasions. I mean, during the GFC, Sarah, the GDP held up because the export sector was growing at something like 16%. But the states of New South Wales and Victoria at that time actually had recessions. And those recessions were hidden by our strong exports to China and Asia as a whole. And we need to recognise that that saved us then, but in the current cycle where the whole sort of global economy will be slowing almost simultaneously, the demand out of China and Asia for our goods is likely to dwindle. In other words, there's been much fanfare in Australia about higher commodity prices. So it's great to get the higher prices, but going forward, we may actually be selling less in quantity than we would like to think we will be able to do. So the Reserve Bank's been very slow in understanding that global inflation would come to our shores. They thought we were insulated at first, and now they're having to raise interest rates very similarly to the Fed, probably because they're following the Federal Reserve at precisely the wrong time in the economic cycle in Australia. Again, there is that kind of COVID stimulus hangover effect starting to take hold. Inflation in Australia is very high, growing very quickly, 5.1 and shooting upwards at the moment. Energy prices are shooting up, food prices are shooting up. And for a country that is a rich exporter of agricultural products and energy, one would think we'd have a different story to tell. But it is, of course, due to the fact that these goods are priced internationally now. So inflation is here to stay in Australia. The Reserve Bank should already have interest rates again at around 2.5%, so it didn't need to be hiking rates just now. Unfortunately, it didn't have the forward vision to achieve this, so it does find itself in a difficult position. I think what we need in Australia is very gentle interest rate hikes at this point, because consumers, businesses, very similar to the US, really feeling the pain of higher prices, do not need mortgage stress as well. And we've had a tremendous property market boom in Australia that looks like it's already rolling over. So there's significant downside risks here to the Australian economy. And it's not a time at all for central banks anywhere to be purely focused on the inflation number. It's really not an appropriate policy given the supply push where this inflation is coming from.
Now, Clifford, you've just emphasized the important role that exports play in Australia's economy. And we both know that the trade ties between Australia and China kind of deteriorated rapidly on the watch of former Prime Minister Scott Morrison. And with the new Prime Minister, Anthony Albanese, coming to office, what kind of changes in economic philosophy and policy are we kind of expecting from the Labour government?
Yes, Sarah, good points. I mean, I don't think we're saying anything that no one else has figured out when we suggest that the former Prime Minister of Australia undid all the hard work of the previous 5, 10, 15 or 20 prime ministers in developing a very good relationship with China. Australia may have differences of opinion with China, as all countries do, on a great variety of matters, and a lot of agreement on many too. But there's no point in the diplomatic rule book of grandstanding for the domestic vote and harassing another nation purely for that gain. And I think that's what's happened to the Australian-China relationship to some degree. Of course, there are issues that need to be discussed, perhaps more often behind closed doors, but between Australia and China to rebuild the relationship. I think the damage done, though, given that China is a long-term sort of vision in its diplomacy. Australia could spend the next 10 years rebuilding the relationship to where it was, but it's important that we start now. And I think the incoming Prime Minister, Anthony Albanese, who I was fortunate enough to attend university with, actually, and I know he has a good heart and is well-intended, I think, it is important not to just ask China to immediately remove all restrictions on our exports to China. I think it's more important to initiate a more deep and sincere dialogue and work some of the nuances of the relationship out before making such requests. So I wasn't really surprised that there was a bit of a reluctance on China's part to respond immediately favourably to that request from the Australian government. But I do believe if the Albanese government moves forward in a more sort of understanding of the other person's point of view as well as our own manner with China and with due respect both directions as China and Australia, I think we can rebuild that relationship. And that would be very important to Australia's exports going forward, because at the moment, if China can buy something elsewhere, it will buy something elsewhere. And on one level, you can't really blame China for doing that.
All right. Well, we'll definitely monitor the situation down the road. But that's all the time we have today. Thank you so much, Clifford, for coming on. Clifford Bennett, Chief Economist at ACY Securities. We'll be back next week.